culture, and security, where we believe effective reform can develop stronger and more inclusive growth for the economy. In light of the political calendar with elections coming in 2019, we have chosen to launch our report in Abuja for the first time ever in the hope that our message will get to the ears of all our political gladiators, including incumbents and new aspirants. We encourage them all to feel free to incorporate some or all of our thoughts into their different manifestos so as to present viable economic roadmaps that can build new growth levers and propel Nigeria towards the path of progress in 2019 and beyond. Your Excellencies, distinguished ladies and gentlemen, I shall now hand you over to our Group Managing Director, Mr. Ike Chioke, who will take you through a synopsis of the findings of our 2018 report titled An Economic Agenda for a New Government. Thank you all once again for coming. I hope you all have an enlightening and rewarding afternoon. Thank you.
Okay, can we put up the presentation while we're trying to fix the audio? Okay. All right. Ike, do you want to use this in the meantime? Hopefully we'll get this fixed shortly.
Thank you. Ladies and gentlemen, welcome once again to the launch of the 2018 Afrinvest Banking Sector Report. My apologies for the little transmission break. We were ready to go. We titled the report An Economic Agenda for a New Government. And please, before I start, it's not to suggest that we have any issues against any government. As my chairman has hinted, this is really our own way of contributing to the political discourse by sharing economic ideas that any of the political gladiators, whether they're incumbents or new people, can incorporate into their manifestos and in terms of how to bring this economy back to growth. My presentation is in in 5 sections. I'm going to talk about the banking sector review. I'll then discuss the evaluation implications for Nigerian banks, and then go into the macroeconomic environment, before focusing on the 7 areas of concern that we've identified in the report. And lastly, how those could be used to formulate an economic agenda for the government. In thinking about the Nigerian banking sector, we have to think about our universe of banks, you know, because presently you have 12, 22, 24, 31, 32 banks in the system, broken up into financial services companies. You can see the likes of FCMB, FBN Holding, and Stanbic. You then see what they call the international banks. Those are those that have an international license. You must have in this regard at least 50 billion naira of capital, and you include the likes of GT Bank, UBA, Union Bank. Then those which are banks that have a national license. And here the bank must have at least 25 billion naira of capital. Examples include Keystone, Citi, Sterling, EcoBank. And some of them are international subsidiaries where they just have only a national license, and their international counterpart deals with their international business. You also have the regional banks. We have SunTrust and Providus. The capital requirement for that universe is 10 billion naira. Then there are the merchant banks. There are 5 merchant banks in operation now. These are sort of new entrants in the industry: Coronation, Nova, Rand Merchant Bank, FSDH Merchant Bank, and FBN Quest. And last but not the least, we have the specialized bank, Jais Bank, which is a non-interest banking platform. So I wanted to capture the banking industry. This is the entire banking industry. But for the purpose of our report, we are not able to report on all of them because some are private companies that don't report often. Some are international companies like Citi and Standard Chartered. They don't also publish the same depth of information as the publicly traded ones. And some have issues with the CBN, so that the information is not as forthcoming, even if they wanted to give it to us. I wouldn't disclose those ones, but you know, like our recent Polaris Bank. So in the universe we cover, we have a total of 2, 4, 6, 8, 9 international banks and 4 national banks. That's the ones that form the crux of this report. So when I talk about the banking industry, as far as this report is concerned, we are really only dealing with these 13 banks that we've been able to analyze for the purpose of the report. But we think that they form a proxy for the industry, because if you really think about the market share of all the dominant banks, especially the tier 1 banks, you will see that from the analysis that we do cover the industry. Sorry, my screen's gone off. Can you get that back on? The visuals? No, it's for the audience. We saw that industry assets have been growing quite remarkably. From 2016 to 2017, we saw a growth rate of 11.5%. Total assets of 37.8 trillion naira. Into half year 2018, we already have seen a more modest growth of only 0.8%. It kind of tells you that banks are sort of slowing down in terms of their growth momentum, because you would have expected something more aggressive if they were otherwise. In terms of industry deposits, we ended the year 2017 at 25.5 trillion naira. At half year, it's reduced a bit slightly. We're hoping to end the year 2018 with 38 trillion naira. In terms of total deposits, sorry, the slides are not matching. The slide on my screen is not moving. Okay, in terms of total industry deposits, we are now seeing something like 25.4 trillion at half year 2018. And by the end of the year, we should get to 26.7 trillion naira in terms of total industry deposits. Industry loans, what you've seen there was a continuous ramp up in loans up to 18.4 trillion to 2016, but following the economic recession we suffered in 2016, that's seen a reduction in that Presently, we are 16 trillion naira. It shows you that the banks also are wary of the political environment we are in and are gradually, withdrawing from the market. By the end of the year, we think that loans will grow marginally to about 16.4 trillion naira. If you think about the loans in terms of market share, and this underscores the size of the market, you see that back in 2013, Tier 1 banks had about 73.4% of total loans. And Tier 1 banks, by that I mean the top 6 banks, GT Bank, Access Bank, Zenith, UBA, First Bank, EcoBank. They have 73.4% of the market back in 2013, with 26.6 belonging to the Tier 2 banks. In the last 5 years, we've seen that grow to now almost 80% of the market. If you took this slide about 5 years before 2013, the Tier 1 banks were about 65%. Again, it underscores what is happening in the sector where the bigger banks are getting a larger share of the market. Next slide. But when you look at non-performing loans, the picture is a bit mixed. Today, what we're seeing is that the average NPL, non-performing loan ratio, is 8.1% for the industry. This is not helpful because the upper limit is 5% as prescribed by the CBN. So you can see quite a number of banks are above it. But part of the challenge coming out of the numbers is that with the introduction of IFRS 9, which is a new accounting methodology, banks have had to take more provisions than they are used to. In fact, this number was actually high. It was 9.3 before. It's trending down, and we expect that as they begin to get used to the new provisioning methodology, most of them will come back within the regulatory limit. From a capital adequacy point of view, the industry is well capitalized. Capital adequacy ratio for the overall industry is at 20%. Among the Tier 1 banks, it's at 23% as at half year 2018. When you look at the Tier 2 banks, however, in terms of capital adequacy ratio, they are well within their limits, above their limits of 10%, but they are lower than the Tier 1 banks. Half year 2018 at 17.5%. Next slide. So when you look at then the industry profile in terms of revenue, what we've seen that turnover growth had been going steadily since 2013, ending at 4.6 trillion naira by 2017 year end. Already at half year, you see the industry recording 2.3 trillion naira of turnover. But we believe that this momentum will just be moderate for this year, simply because, again, banks are not creating as much risk assets as they would like, given all the endemic issues in the economy, particularly the political environment. So we are looking that they will end the year just marginally higher than 2017 at about 4.7 trillion naira of risk assets. From a cost-to-income ratio perspective, again, cost-to-income ratio is if you think about the total income of a bank against their total cost. That profile underscores the efficiency of the banking industry. What happened was in 2016, when we had the recession, you could see that that number was at the highest point, at 72.5%. Of course, it's not that the cost went up. It's just that the income came down precipitously because of the recession. Coming out of the recession in 2017, because income had risen, the cost-income ratio was more moderate at 60.4%, but we expect it to climb towards the end of the year. It's already at 64.4%. Again, on account of reducing income levels, because banks are being less aggressive in terms of revenue growth. From a profit trajectory point of view, it seems that the banks are quite resilient from the rest of the economy in terms of their profit momentum. In 2016, when we had our economic recession, they still recorded nearly 600 billion naira of profit before taxes. In 2017, they reached a record of 842 billion naira. At half year 2018, they're already above half a trillion naira in terms of profit before tax. And we are projecting that for the first year, our universe of banks will get to over 1 trillion naira in industry profit, with probably 2 or 3 banks accounting for about 50% of that number by end of 2018. So that gives you the picture in a nutshell of what we picked up from the research on the banking industry over the last 18 months. Let me talk a little bit about the valuation implications. How are the banks valued in the capital markets, particularly in relation to other markets? This slide here tries to explain a valuation benchmark. The proxy we use is what they call price to book value. So the price to book value, let me again explain, is the total market capitalization of the bank divided by the total shareholders' funds of that bank. So that's what comes to as price to book value. So if in the case of Access Bank, the whole bank is worth 100 billion as an example, when you get 0.5 as a multiple, it means that the market is valuing Access Bank at 50 billion naira. Meanwhile, its shareholders' funds, all the cash it has, is at 100 billion. So if you put 50 divided by 100, that's what gives you the 0.5. So it's an index of how the market looks at these banks. But if you then compare Access at 0.5 with ETI, that is EcoBank Transnational International, the EcoBank subsidiary, at 0.7, First Bank at 0.5, then look at GTB at a whopping 2.3 times multiple. And you come back to UB at 0.7, only Zenith is approaching 1 for the tier 1 banks. At the GTB level, if you use the same analogy, it means that if GTB had on its balance sheet total capital of 100 billion naira, the market is valuing that bank at 230 billion. So there is something to be said about how the market perceives different banks, from a valuation point of view, that is totally not connected to the way consumers use the banks. Because some people might have a view, oh, I like this bank better than the other, but investors have their own independent perspective, and they show it in the valuation of these banks. And this is the profile for the tier 1 banks. If you go to the tier 2 banks, again, something similar is happening. Here, when you compare Diamond, FCMB, Fidelity, Stanbic, Sterling, Union Bank, and Wema Bank, you see that the average for the industry is only 0.6 times. Meanwhile, Stanbic IBTC is standing at 2.1 times multiple. So let me pause for a moment. An investor once asked me, why is it that GTB is trading at such a differential, similar to Stanbic, than the rest of the banking industry? And I think one of the reasons could be that the two of them have international following. In the case of Stanbic, you've got Standard Bank of South Africa that has a more than 51% majority stake in that bank, and therefore is able to ensure that any available shares, it takes it up, ensuring that the valuation is high. In the case of GTB, GTB is perhaps the only Nigerian bank that is traded on the main board of the London Stock Exchange. Indeed, Afrinvest was the financial advisor to that bank when they listed on the London Stock Exchange. And from the demand profile of that market, it pulls the valuation of the local market. And so that creates more liquidity in the shares than you see in all the other banks. I know a few of the others, like Zenith, have a listing internationally, but they are often listed in what will be considered minority markets. Like I think one or two of them are listed on the Irish Stock Exchange, which is not really where the main international investors go to exchange cash for shares. So that explains that differential. But when you compare the valuation of Nigerian banks, and we've taken the tier 1 banks as a proxy for Nigeria, you see Nigerian banks are trading at 1 times price to book value. However, in Ghana, Ghanaian banks, many of which are a fraction of the size of the Nigerian banks, in fact, most of the Ghanaian banks will be just struggling to be a tier 2 bank in Nigeria, are trading at a better multiple of 1.5 times. In South Africa, you then have many banks, the top 5 South African banks, multiple times larger than our biggest banks. They are still trading at a much higher premium of 2.7 times. And of course, it underscores why Standard Bank is trading at 2.1 times, because its parent company is also trading at a very rich multiple. In Egypt, the multiple is 1.8 times. In Kenya, it's 1.5, and Morocco at 2.0. So there's clearly a differential, a big disconnect between the value of Nigerian banks and the value of other banks in similar African countries. When we compare this to the BRICS region, And the BRICS region is the oft-quoted Goldman Sachs universe of Brazil, Russia, India, South Africa, and China. You see that the average for the BRICS is 1.7 times. Again, a whole 70% premium against the 1 times multiple for Nigerian banks. So there's a lot of work that still needs to be done, and I think that comes from how we open up the economy, how we create more opportunity for banks, for them to leverage on the huge potential in this economy that we all talk about so often. So on that note, I will then segue into other parts of the presentation, where I'm going to talk about the macroeconomic environment. From a global growth perspective, we see global growth today at 3.7%. That is global growth from a GDP point of view. This is down from the estimate we had at the beginning of the year of 3.9%. In sub-Saharan Africa, growth is now looking to end the year for 2018 at 3.1% compared to 2.7% in 2017. Obviously, Nigeria is a drag on that, and I'll explain to you how that comes about in a few months. Amongst the emerging markets and developing economies, growth is higher at 4.7%. European area, only 2% expected by the end of the year, and the Asian economies ending at 2.4% by the end of the year. But global growth is being impacted by several forces. We see policy normalization in systemic central banks. Until recently, we had this quantitative easing happening in what we call the systemic central banks, the Federal Reserve Bank, the European Central Bank, the Bank of England. Even Japan was joining into the action. But of late, what we've seen in the last 2 years is many of these countries have begun to raise interest rates. In September, the US Fed raised their benchmark rate to 2.25%. You know, that's almost a 2% change from what it was, 3 years ago. On that basis, you see now money leaving emerging markets like Nigeria, South Africa, Turkey, and moving to the developed markets because investors will say on a risk-adjusted basis, I'd rather earn 2.25% in the US government, US treasuries, than come to Nigeria and get 14%. Another factor that's impacting on growth is what we call the trade war. As you see, President Trump has been on a rampage, imposing trade sanctions on China, and the effect of that is going to dampen overall global growth. Today, if you look at the world GDP of 80.4 trillion naira, the US economy at 24% of that, China at 14%. Both are huge contributors to the world economy. When you look at it from a point of view of trading global goods and services, both of them are doing about 10% trade. And if you take out 20% trade from that, fighting each other, you will obviously have a constraining effect on global trade. So those are one of the dampeners we see from what is happening external to Nigeria. It's important that policymakers never lose sight of what is happening outside the country in making their decisions, because they could be swept away, by a storm if they are not careful about its implications. Furthermore, as I mentioned, because of policy normalization in the US and other contagion emerging market effects, we've seen currencies being severely affected in South Africa, Turkey, and Argentina. These are markets that are very similar to Nigeria. Of course, the Naira has held a bit more stable than that, but it tells you that we cannot look away from the effect of policy reversals from other countries. If you look at growth in Nigeria, it was only in 2016 we are coming out of recession. That's the red line there, red box, minus 1.5%. But in 2017, we grew to 0.8% on a GDP basis. This year, we're hoping to end the year at 2.1% GDP growth. But even 2.1%, a far cry from the sort of level of growth we were used to. If you back in 2014, we were at 6.2%. And the 5 years before 2014, the economy was growing at between 6 to 7%. So there's a lot of work needed to do to bring Nigeria back to that high single-digit level of growth. Because if we don't get it, we are clearly facing impending danger. The issue there is that every year Nigerians get poorer, simply because our population growth of 3% and you're growing at 2%, there's really not enough resources to go around, including all the inefficiencies we have in the economy. So something needs to be done to really bring that growth back up. If you look at what is happening on the crude oil price and production trajectory, being that oil is the mainstay of our economy, we've seen a nice recovery coming from the low levels. You saw average price of $43 per barrel in 2016. It was about $54 per barrel in 2017. Today, oil is above $80 a barrel. So this is all very helpful for Nigeria. At the same time, we've also seen a nice climb in terms of production volume, coming to almost 2 million barrels per day. But even that is below the budget benchmark of 2.3 million barrels per day. The issue we then have is this should all be beneficial. How come then are we doing massive deficit financing of the budget when we're actually having additional income, much more income than the previous governments before the present one? And this is quite evident when you look at what they call the external balance. This is our current account surplus, what has been happening to it. Back in 2015, we're in negative territory as a result of the decline in oil prices. Then it started coming up at 2016, just $2.7 billion. As our 2017 year end, we're at 10.4. Half year into 2018, we're at 9.3, and the year is not over. Clearly, we have a lot of income, but the numbers don't seem to add up, because when you look at what is happening on a deficit basis, in terms of the fiscal deficit, you see that the actual deficit has been rising, and as at 2017 was 3.8 trillion naira in real numbers. They told us that it should be coming down, but clearly it isn't. It's 3.6 trillion naira, that's what we're expecting by the end of the year. And in terms of, from a point of view, in terms of percentages, once you see your deficit going above 3%, you should be worried, because we have what they call a Fiscal Responsibility Act that pegs our deficit at no more than 3% of GDP. But as you could see in 2017, it was above 3%. That tells you that clearly we may be going to a region where the debt is likely to become unsustainable. And the main challenge for the government is really how to raise revenues, because you can see that whenever they do their budgeting, the income they projected doesn't quite come through. And as a consequence, the actual deficit is much more than the budgeted debt number. But overall, the naira to dollar exchange rate has been benign, has been stable ever since the introduction of the investors and exporters window back in April of 2017. We've seen a narrowing of the band, but we still have the issue there that we have two official currency rates. You've got the red line, which is the official exchange rate at 305, and then you have what is the orange and green line, where the rest of us trade at, the investors and exporters window at 360. So clearly, that creates a bit of a conflict, and I do know that a lot of agencies and investors from around the world do raise an eyebrow about why we maintain such a differential exchange rate profile. But from an inflation point of view, we saw inflation rising all up until 2016, 2017 rather, but headline inflation has for the first time started coming down, which is a positive. The only challenge there is that food price inflation is still high and needs to be brought down to a more manageable level, although the trend is pointing in the right direction. Although some of the other issues I will explain later, like insecurity in the Middle Belt, in the North Central region, is also causing concerns on food price inflation. So, our report then decided to focus on 7 economic areas of concern. And these areas of concern came out of the thought of how do you get the growth back into the economy? Because it's all very well to say that, okay, 2.1% GDP per annum growth is fine, but when your population, as explained to you earlier, is growing at 3%, then you need to do much more than 2.1%. And indeed, for Nigeria to grow, we need to really bring it up to sort of the higher single digits or even perhaps double-digit numbers. we decided to look at 7 sectors, the first being oil and gas. In oil and gas, we've identified 2 issues there. The first is the Petroleum Industry Bill. This is a bill that we've been talking about for 10 years. 10 years ago, that's the first time we talked about it. For 10 years, we've not been able to make a decision and pass this bill. There are 3 components of the bill. There's a Petroleum Industry Governance Bill, there's a Petroleum Industry Fiscal Bill, which is the main one that drives investment, and there's a Host Community Development Bill. So far, all we have is the Governance Bill waiting for presidential assent, but even that one has not been passed. Without passing the Fiscal Bill, we have basically shortchanged the economy of additional new investment into the sector, a sector that is responsible for 90% of our foreign exchange and stabilizing most of our income. So something needs to be done, because the opportunity cost of that, we've estimated, is something like $10 to $20 billion of investment we've lost in the last 10 years. And when we're thinking about how we can unlock value in this economy, it's clearly sitting on our table, and it's really between our legislators and our executive to do the needful and get that bill passed. Another aspect of the oil and gas sector is the downstream fuel subsidy. And here, for many years, for political reasons, we've avoided the elephant in the room. I know that in the budget this year, there's no mention of subsidy, but the actual effective subsidy for 2018 will be approaching 1.6 trillion naira by the end of this year. Last year, it was 765 billion naira. And the reason it's rising is that as oil prices are rising, the subsidy goes up. The bar in blue is the calculation of the subsidy amount if you use the central bank's 305 exchange rate mechanism. But however, since the rest of us use 360, it is appropriate to apply the opportunity cost, the full opportunity cost of that foreign exchange we've thrown away, and that's why you get to the 1.6 trillion naira number. So clearly, when you're thinking about how to unlock capital in the economy, to divert capital to other key sectors, it is all within our control to do so. The second sector we looked at was the power sector. And here we are faced with a present dilemma. You have a sector where there's inadequate power infrastructure, there's huge metering gap, there's the whole value chain illiquidity going from the gas suppliers to the GENCOs. GENCOs are the generating companies, to the TRANSCOs, which is the transmission company of Nigeria, to the DISCO, which is the distribution companies that distribute power to everyone in this room in their various regions. And lastly, there's a new group, the metering companies have been introduced. There's huge illiquidity because the money that comes from the consumer is not enough to pay for the actual real cost of power. As a consequence, people are not investing in gas so you have gas shortages. We have today installed capacity of about 10 gigawatts, that's 10,000 megawatts of generating companies available in the country, but there's not enough gas to some of them. I think if all of them were firing today, you have at least 7 gigawatts of power available. But in a good day, I think Nigeria doesn't get up to 4 gigawatts of power, assuming the whole network is stable. And this is underscored by some of the issues we face in the power sector. If you then put in things like the non-cost reflective tariff, then you can imagine that the problem will not be solved. And then last but not the least, what he calls significant aggregate transmission, commercial, and collection losses. This is what happens when you say power is transmitted to you from, say, Gerugu power station, and you're getting it in, say, in Enugu Disco, Enugu Distribution Company. If they transmitted 1 gigawatt of power, by the time it gets to Enugu, they may be receiving only 400 gigawatts. So a whole 60% has been lost, either through the transmission losses in the system or the commercial losses, some people are not paying, or lastly, the collection losses. Some people have been billed and they refuse to pay. Sorry, the commercial losses are people who have tapped light illegally. So they are collecting the light, but there's no system that is billing them. So these are material issues, and the average in the whole economy, in the whole industry, is quite significant. Next slide, please. Sorry. So from a power sector reform point of view, and if you compare that to the oil and gas sector, where I was saying that in the downstream sector, this year we will probably spend 1.6 trillion naira in subsidies. You look at power, we have a problem. The World Bank has partnered with the federal government and CBN to say, okay, the problem is liquidity, right? We're going to put money to it, 700 billion naira to come in and fix power. But it's not working, simply because even the World Bank has said, you guys need to make the tariff cost reflective, because if I put money into a system where the actual cost is not being paid for, then it won't work. Hence, you ask yourself, why on the one hand are we subsidizing consumption in PMS, petroleum products? Meanwhile, we could have used that money to fix power, which at least will help us in the production activities of this country, power up the manufacturing companies, provide power to hospitals and schools, and even we can decide to subsidize everybody that's consuming below a certain threshold of power. In which case, if you're in a house that doesn't have air conditioning, 2 rooms, you get power at the current rate, but if you're above, you pay commercial rates, which will even be cheaper than what you're paying with your generator when you factor in the total cost together. So there are issues that we can solve that we have refused to do. Obviously, the other challenges like what you have that we're trying to solve by the meter asset provider, to have people independent of the distribution companies giving you meters. But even that is causing concern amongst the distribution companies, because they have rightly made an investment to take over the entire network. But now you're bringing someone to take a bit of their own business platform. So those are issues that we can resolve, and if we resolve them, it can help to get the power sector back on track. Another area of development that we looked at was the human capital sector. And here we focus on both education and healthcare. This slide shows you the percentage of government expenditure on education as a percentage of budget. This year we'll be doing 7.1%. If you compare ourselves to other comparable economies, Ghana is doing 20%, Kenya 16, 17%, and South Africa at 19%. Clearly a lot needs to be done to get the educational system back on track. And even the 7.1% we're spending, quite a good chunk of it goes into administrative activities rather than the actual function of education, because of the different layers we have put into our system. So something urgently needs to be done in reforming the educational sector, because the quality of the graduates we are producing, many of you here who have companies see the graduates coming in from NYC, and sometimes they're quite alarming at the level of what they don't know, even though they are graduates. In the healthcare sector, we did a comparison of how much Nigerians spend as a percentage of out-of-pocket of their money relative to other countries. And you can see in a place like South Africa, someone who has a medical bill of 100 naira effectively spends about 7 naira, 70 kobo. But in Nigeria, if your total medical cost is 100 naira, you'll be spending about 72 naira of that money. You know, multiply that across the system, you then see why it's a strange country where we're spending billions of dollars every year going from medical tourism to India, to Dubai, of course, to the established markets in the United Kingdom and the US. When if we could focus on building a proper health insurance system, we'll be able to contribute more money in the pool that would allow investors to build the necessary specialized hospitals we need. Another area we looked at was transport infrastructure and the nature of our competitiveness. And here on a scale of 1 to 7, with 1 being the weakest, Nigeria is on the par compared to the likes of Ghana, Brazil, essentially comparable peers in emerging markets, Africa, and the BRICS region. And that underscores some of the issues we face. I have it on record from a Chinese company that the cost of sending a container, 20-foot container from China to Lagos is about 50% of the cost of moving that container from Lagos to Kano. That tells you the difficulties of our economy, that by the time the goods and services are coming in to us, we are paying multiple amounts for it. So there's a lot that we can do in terms of, again, unlocking money in areas where they are trapped and investing it in areas that can make cost of living easier and more affordable for Nigerians. In looking at non-tariff barriers, some of the areas that can be helpful will be things like what can do with fixing the paperwork in customs. Paper congestion is a perennial problem, limited rail systems. Those are things that we need to talk about. And the other non-tariff barriers, I mean, a company like MTN will be complaining about how it's been dragged up and down in Nigeria simply because it made an investment. But sometimes, even if you find a mistake that is as significant as $8 billion that somebody made over 10 years, it probably is not the best way to manage it if you decide to make all the information public, because it has a dampening effect on other investors who are considering Nigeria as an investment destination. So indeed, Nigeria needs to work on its non-tariff barriers compared to its peers. And if you see on this scale, our non-tariff barriers are among the highest amongst our group. If you look at agriculture, we decided to take two crops that we know very well, rice. In rice, you can see that back in 1996, our yield per hectare was comparable to Thailand and Vietnam. Move forward 10 years later, and you see how they've moved much further. With Vietnam at 57.5 tons compared to our 19.5 tons. So there's a lot that we can do in just, tilling the ground more efficiently, using fertilizer, modern technology, and science to improve our yields. Yes, the government has done a lot in agriculture, and what you've seen is that more land has been cultivated. But there's no point expanding the land cultivated if you're not improving the efficiency of yield as well. And the same thing is similar when you go to oil palm. And here, this is a crop that was only in Nigeria 30 years ago. The likes of Indonesia and Malaysia took it from us, and see where they are in terms of yield per hectare compared to what we are doing presently. So a lot, again, can still be done. And these are two crops that, if well managed, on the right side, we can reduce the amount we spend in terms of foreign exchange being used to import rice. On oil palm, we can use that product to actually earn a lot of foreign exchange. And that's very helpful to the economy. The last but not the least is the fault lines of insecurity in the country. Once upon a time, something like kidnapping was relegated to the South-South. Today, it has become a Me Too kind of crime, because all across the country, kidnapping and assault is rife. Aside from the other endemic issues, like you see in the Northwest, cattle rustlers, North Central, herdsmen and farmer clashes. Southeast has this IPOP problem that may rear up as a result of election. South-South has a perennial Niger Delta issue that could come up. And then Northeast, which is our hotbed, where we've lost more money, more people in terms of human lives, and displaced millions over the last few years. A lot really needs to be done in terms of security to resolve problems on a permanent basis, because if you let them fester, they are likely to be copied by other parts of the country, and before you know it, it becomes endemic across the country. In trade and investment, you see that our FDI trend has been declining for the last 10 years. Back in 2008, we attracted a total of $8.2 billion of foreign direct investment. Our peak was $8.9 billion in 2011. So far, in 2017, we only saw $3.5 billion. We wouldn't expect to see that level in 2018 because, obviously, the year before elections. So this is a worrisome number. When we see all the activity in the economy, well, people are not really investing. He talked about what is not happening in the oil and gas sector. If we had done the petroleum industry bill, the estimate there could be as much as $10 billion per annum could have come into the economy if we had a fiscal regime that works. So clearly underscores the challenges that we are facing in the economy. So those are the 7 areas of concern. And we wanted to end our presentation and our report by saying, out of all these areas, and this is by all means, these are not everything. We just thought we should focus on the 7 critical areas. You could think of a new economic agenda for any government, whether it's the incumbent or the new contestants coming in, new aspirants, all could borrow a leaf from this report in terms of framing an economic agenda. Whether they're running state governments or whether they're at the federal level, there are a little bit for everyone to pick from, depending on your focus. But in oil and gas, clearly work can be done by engendering more transparency and more disclosure in oil and gas contracts. I won't bore you with all the scandals of issues that have emerged. Some people that should be in power are not seeing what is happening, even though they're supposedly in control of the ministries. But following that, you need to expedite the passage of the Petroleum Industry Bill to attract investment, and then have the political courage to liberalize the downstream sector. In power, we have to eventually do it. You have to go back to a cost-reflective tariff. So that has to be done, because that would then be what would be required to attract the funding by multilateral partners to help us block the liquidity gap in the system. And after that, we can now think of other more minor items like bridging the metering gap and looking at ways to enhance the balance sheet of the distribution companies. In the human capital development, there are critical areas, education and healthcare. It's Bill Gates that came here to this country and said, even if we built all the best infrastructure, fixed power and fixed oil and gas, and our human capital is deficient, then you will not have the human capacity to really manage a growing economy. So a lot of work needs to be done in education. It's not just increasing the budgetary funding, but making sure that that money gets down properly. And therefore, you need to think of a holistic partnership between the federal government and the states to ensure that the universal basic education budget really permeates down. And you cannot do it without technology. That's why we talked about some of the issues we see in the broadband area. But we must also prioritize interventions for weak regions, because there are clear educational disparities across Nigeria. It is true that in some states, the total number of people that take JAM is less than a couple of hundred, and that clearly cannot be the case. We must find a way to bridge that. Healthcare is an urgent one. We need to increase funding to at least 5% of GDP based on UNESCO recommendations. Work on deepening the health insurance penetration, because that helps us to build a pool of capital, similar to what we have done in the pension industry. And with that capital base, you will then find that hospitals can come in and set up. The reason why hospitals work in developed markets is that if all of us in this room are paying health insurance, statistically only about 10% of us may be sick at any point in time. So whenever you go to the hospital, they will treat you, and you pay whatever minor amount, usually about 10-20% of the cost of the service that you have to do, because all of us have underwritten the service for the 10 or 20% chance that we'll be sick. And that's really what we need to start focusing on, because it doesn't make sense in an economy such as ours that we are compelled to insure our motorcycles, our kicking our peps, but human beings that are riding them don't have to have insurance. Something really needs to be done. And lastly, in healthcare, we need to develop a comprehensive health strategy, particularly at the primary healthcare system, because often you see specialist hospitals being inundated with problems that can be solved at the primary healthcare level, that involve just simple, hygiene issues or malaria problems, or even prenatal care. Those can be, moved to those levels. In transportation, we talked about how to attract and deploy cheap multilateral funding. Obviously, when you're trying to get such capital, you need to have your own counterpart funding. But finding the counterpart funding can be unlocked from the waste we have in our system today, which will enable us to attract the estimated $196 billion that the Economic Recovery and Growth Plan has highlighted. That is what is needed to grow the Nigerian economy between now and 2020. Now, it can all be done. There are clear methodologies available. There's an estimate of about $9 trillion minimum chasing projects and chasing economies around the world. But unless we take the difficult decisions of tweaking the reforms to fit what the investment dollars are looking for, we will never be able to attract such monies. We need to collaborate more with the private sector and be able to do more with public-private partnerships. But PPPs work when there is a stable legal environment, when people are confident that if they make an investment, you will not come back 5 years later and change the rules. So that is critically one area. And that way, we can then focus on prioritizing the investment in infrastructure on the key commercial centers and the trade routes so that our roads are connected to places that have the most economic value to the economy, and that will then help us to get all the feeder parts of the country. In broadband infrastructure, this is critical. Today, there's a fourth industrial revolution that is going on, and that is technology. Already, some economies are moving to blockchain. That's even further ahead than what we had seen. But we can't even begin to think about that until we have high-speed internet commonly available everywhere in Nigeria. In Rwanda today, and Rwanda is a small African country, you can drive for 200 kilometers in their express roads, and you will not drop out of signal, and it will still be high speed. You go to an average primary school, you see children running around in clothes not dissimilar to what Nigerian kids in the village are wearing, but they have a padded iPad that they use to study. They've already moved the primary school curriculum to a digital platform. And this is something we have to be willing to embrace and do. Otherwise, we are stuck producing garbage where people are not being developed properly. You know, human capital does not become capital unless it's healthy and it is educated. And so something urgently needs to be done to strengthen our broadband infrastructure, because that can help us to fast-track some of these areas we're talking about in terms of aspects of development. Obviously, we must think about easing multiple taxation for companies that want to, lay the fiber, provide it to the government. I know a number of companies that have structures where they can even lay the fiber for free, so long as provide services to government buildings, but charge any other private user. That could be a way of expanding the infrastructure. In agriculture, we should prioritize our crops with high productivity and export value. We've talked about this decades and decades, and we say and do the right things, but we need to kind of have a holistic plan and think of how do we develop Nigeria to have specializations in some key areas that anywhere in the world, they will know that the Nigerian product, whether it's our oil palm or our rice, is of the best quality. And we can't do that without thinking of the entire value chain. And that's why we must think of how to boost our productivity through better irrigation methods and fertilizer usage. You see that one of our challenges in agriculture is that we run on rain-fed agriculture. So as a consequence, in the dry season, we have scarcity. In the rainy season, we have surplus. So you have this boom and bust cycle that goes on every year. There's enough capacity in this country with all the river basins that we have to make sure we have a more efficient irrigation system so that agriculture would always be producing for at least 9 or 10 months of the year, rather than just 5 to 6 months of the year. And that would then help us attract more private sector investments into the sector and help increase the use of machinery for agriculture. Last but not the least, without security, no investor is safe. So the incidence of insecurity has also been a challenge. We started seeing the kidnapping in the Niger Delta region. That was when many of the oil and gas companies began to move their expatriates out of that region, to the point that a big city like Port Harcourt was hollowed out. Once upon a time, it used to be a fun and interesting garden city to be in, as they are called. Then lately, it's become more of a place people just go in with maximum security. At night, they stay in their hotels or at home. We must find a way to fix security problems on a permanent basis, because when we let them fester, it creates a copycat mentality, like we've seen in kidnapping, which started in the South and has now become commonplace all over the country. Because when people feel that the government is not dealing with the perpetrators of these crimes, they just mushroom across the country. Same thing is happening now with herdsmen-farmer clashes. In my hometown, for instance, we're having local issues because some of the other villagers who are from Enugu State are using herdsmen to terrorize their brothers and sisters, simply because they realize the police are not arresting the herdsmen. So we must find a way to deal with the root causes of problems and punish those who have broken the law. And of course, in a system where we don't practice justice, you have this deficit of trust. And so the collaborative mechanisms between the security agencies and the population is broken down because people don't want to go to security and report any crime if they feel they are not going to be well treated, or worse, they may even get arrested for coming to report it. When you have all said and done, you still have the issue of how you equip the military and the police forces. Despite all the increasing budgetary expenditure allocated to this sector, when you see the policemen on the street, you still wonder, where is all this money going? Or what has happened to that money? Again, it comes back to the issue of transparency and disclosure. So more has to be done to make that transparent. In trade and investment, work needs to be done in easing the non-tariff barriers to trade and investment and help to accelerate the business environment reforms, particularly providing incentives. We've talked about the AFTA bill. Of course, there are issues for the Nigerian economy because we are not competitive. A wise view would be that if you sign, Nigeria could easily become a dumping ground for more competitive economies. I showed you in earlier slides how even Ghana is far more competitive than Nigeria. But we can't live as an island in a world where everybody is collaborating more efficiently. So ultimately, with proper consultation and a determined plan to conform, we ought to eventually sign that after bill. So once you can think of the way forward across all these 7 sectors that we've talked about, it's then easier to have a fiscal policy implementation pillar that ties them together. Because fiscal policy does not operate itself on a vacuum. You need to think of how we make debt management more prudent. You know, this year, the rest of this year, we're going to do another $2.8 billion of Eurobonds to fund the deficit in the economy. If you think about the implications for the debt to GDP, it looks modest. But when you look at it the other way, from a debt service to revenue, it imposes burdens on the future generation. And without reforming the economy, we will not have the income to pay off that debt in the future. But if we can reform the economy and attract more investments, it helps us to build the fiscal buffers. The fact that we'll take away the subsidy in areas like petroleum will free up at least $5 billion a year to help you put more money in your sovereign wealth fund, put more money in your stabilization fund, so that should the next oil crisis come, and indeed it will come. Oil is currently at above $80. What are we doing for the next decline to $30? It will come, because eventually many of the developed economies are moving to electric cars, using more gas. And so at some point, you're going to see in the next 3 to 5 years another correction in the oil price. We need to think about how to have an appropriately valued exchange rate. Today we have the official at 305, the I&E window at 360. It's still an issue of concern to many investors, which is the right way to value the Nigerian economy. And last but not the least, the fiscal consolidation. We've talked about removal of subsidies and the capping recurrent expenditure. If you think about government expenditure profile, it still always confuses me why a government department that may use 2,000 boxes of paper to run their printers and their copy machines a month is buying each box of paper at the multiple times the cost of Afrinvest, where we use only 2 boxes a month. So something is seriously wrong, because I would expect the person that has far more demand to have economies of scale and pay maybe 20 or 30% of what I'm paying, rather than paying, if you see the budgeted amount, 5 to 10 times what I'm paying. So the numbers does not add up. So if we really want to get back to the growth, that growth that we are searching for, that brings Nigeria back to perhaps being on a trajectory to be anywhere close to the Economic Recovery and Growth Plan, which is a beautiful document, then we definitely need to sit down and make those reform issues that we're talking about. On that note, ladies and gentlemen, I want to thank you for listening. Thank you.
Thank you very much, Ike. Please, can we put our hands together again for Ike? That was quite a bit to take in, and I think he delivered it with excellence. A lot to ponder about. I was just sitting and thinking about the fact that this is a banking sector report, but he spends quite a bit of the presentation speaking about the environment and, of course, the macroeconomic issues. But indeed, it is an apt focus because in the context of that economy is where we situate the banking sector. So please, once again, can we put our hands together for him? Very well delivered presentation. At this point, I would like us to please all recognize the executive governor of Edo State. And for those who do not know, he is also the founder of Afrinvest many years ago. Please, ladies and gentlemen, can you put your hands together for His Excellency Godwin Obaseki? All right, so as I was saying, so much to think about in that presentation. And earlier today, as many of us in this room would know, the Nigerian Economic Summit, the 24th edition of the Nigerian Economic Summit, took off. It is one of the reasons why we don't have a couple of people here, but we look forward to having them as we go along. But at the summit this morning, there was an interesting presentation looking at the economy. And one of the points that was made was the future of Nigeria could either be one where we talk about what many have described as the phenomenon of a stock economy. Now, what is a stock economy? It's essentially an economy that is resource dependent, where you see a lot of volatility in its growth, and then, of course, there's a lot of poverty. Now, many of these issues, if we look at the history of Nigeria, we will say we can really identify with it. But what we're hoping is that as we draw attention to the issues in Nigeria today, through this report, our policymakers and indeed those who are vying for political office will really think about what the future holds for our great country. So really a lot to think about there. I also thought it was quite interesting the point that was made about the banking sector and its valuation right now. We saw some really, you can really describe them as outliers in terms of their valuation. So he mentioned, for instance, the GTBs and the Stanbic. And I was wondering what really could we say is the real reason for that disparity? Well, some people have talked about transparency premium, quality premium, but at the end of the day, I think what is clear is that there is an opportunity in this market. But what, to me, and I'm hoping that when we get into the panel, we'll get to understand better, is whether or not that disparity is telling us a story. Could it be that the economy is moving into this direction of a stock economy, and as a result, some people are really concerned whether or not these valuations will be realized in the future, or is the smart money just sitting on the sidelines for now, and hopefully we'll see the money come to Nigeria in a bit. All right, so just to give you a sense of what is coming up, we would be having, of course, the official launch of the report, but beyond that, we'll have a series of good messages. We have a lot of distinguished guests in the house today, and some are still on their way. And then, of course, we have what I think will be a highlight of today's event, a panel conversation looking at the report and its theme and economic agenda for the new government. And I'm just waiting to confirm what is coming up next. Robert, do you have any of this for me? So, Robert, it's coming to me. Okay, all right. So we'll... Wonderful. Okay, I think we are going to go into the panel conversation now. But before that, I would like to just recognize Senator Ayoko Eze. He's also with us today. Please, can we put our hands together for him? You're very welcome, sir. Thanks so much for coming. And so I will just at this point bring to the stage the panelists for the next session, starting with Dr. Ifeanyi Obiazu. Please, can you join us on the stage, sir? He's a healthcare professional and will be sharing his perspective on that. We have Munachi Okoye from MCO Real Estate, the CEO. All right. He'll be sharing some interesting perspective on the real estate sector. We have Riyad Balukji from Bulos Group. Thank you so much for joining us. He is a local investor in Nigeria, so he certainly will have some useful insight into how they see the future of the economy. Mr. Luvia Forlan from Propaco. Thank you so much for joining us. Now, he will be giving us the foreign investor perspective. And last but certainly not least, we have the pleasure of His Excellency, the Governor of Edo State, Mr. Godwin Obaseki. Okay. Okay, we have Mr. Obaseki and, of course, the presenter to defend his work, if you like, the Managing Director of Afrinvest West Africa, Ike Chioke, will also be part of the panel. All right, on that note, I'd like to hand over to Ike. He will be moderating the panel conversation. Can we have the microphones on the stage on, please? Maybe you can start with this.
Yes. Thank you, ladies and gentlemen, and thank you, Your Excellency, for honoring our invitation to be here. The highlight of our banking report this year was to talk about an economic agenda for a new government. And I explained to the audience before you showed up, this is not in any way suggesting that we're campaigning for any new government other than the incumbent, but to say that once you get to a swearing-in ceremony come May 29th, you actually have a new government. So whether the incumbent comes back or whether a new person comes in, they really need to think about an economic agenda. In the Economic Recovery and Growth Plan is a solid document that outlines the growth possibilities for Nigeria. But in that document, it says something about how you attract $196 billion out of a total of $240 billion that the economy needs. But the 196 needs to come from the private sector. In thinking through that perspective, we then said, for you to attract that kind of money into this economy within such a short space of time, it is available, but you need to do massive reforms. And so we took out 7 areas of concern, in oil and gas, in power, in transport and infrastructure, in agriculture, in human capital development, including education and healthcare, of course, in security. So when you think about those areas, we thought those were the most endemic areas. And so I'd like to ask you, how do you see from your platform now as a governor of a state, the challenges you face in trying to get the myriad systems of the state, particularly from an institutional building, to work together to create that capacity for you to take advantage of opportunities in your economy and Nigeria as a whole?
Thank you very much, Ike. First, let me congratulate Afrinvest on another successful launch of its banking report. I think I'm privileged to be one person that has witnessed all the launching of all the reports except one. When we started this exercise of putting reports together, sector reports, starting with the banking report, I think it was in 2005, just about the time we had the banking consolidation. It became part of the tradition of Afrinvest to try and communicate its thinking, its views about the various industries or various sectors, but the banking report has stood out as the flagship report for the company. So, Afrinvest, congratulations. Quite a lot is going on in the economy, but I think the way I see the Nigerian economy is an agglomeration of sub-economies. So, yes, what constitutes the national economy is made up of subsets of, economies, particularly at the subnational level. And so for Nigeria to be competitive, the things have to happen not only at the national level. Some of the reforms you are suggesting should happen not only at the national level, but at the sub-national levels, because that's where a lot of the economic activities will occur. For us in Edo State, for instance, where we believe that we have some core competitive advantages because of our location, because of the availability of fertile land, we're in the rainforest, because of the logistic opportunities, because of the availability of gas. You find that there's still constraints, political constraints that affect your competitiveness even as a subnational. So some of those constraints which have been highlighted needs to be, further explored. For instance, you talked about the issue of security. And if you look at the Constitution, that's on the exclusive list. So I cannot own a local police. So I have to rely on the federal policing system to provide security for the state. And I am competing with 36 other units for that resource. So if I'm not able to get enough, from the center, then what happens? How does that leave me as a subnational to be competitive in terms of providing security to attract investments? Another area is electricity. Edo is perhaps one of the few places in Nigeria that has a real competitive advantage in generating electricity. And the reason is simple. Because of our location, we're just logistically situated in the heart of the country. The networks, the transmission networks all come into Benin, into Edo State, and from there electricity gets redistributed across the country. The gas networks all come through Edo State. So where gas and transmission meet is about the cheapest point to generate electricity. That's why we were able to attract an investment like the Azura power plant. But having done that, then what happens? Because the power has to go into the grid. You have the whole, electricity reform, which has its own challenges, which unfortunately has not led to attracting more investors in, in the generation of electricity. Yes, we have 900 megawatts in Benin City alone being generated, or a generating capacity of 900 megawatts. Our goal was by 2022 to be able to generate at least 3,000 megawatts in Benin City alone. So that's constraining. But it's even worse than that. The whole regulatory environment around electricity even makes it more challenging. We have onshore gas in Edo. We have the largest onshore gas assets in Edo State. And we therefore decided to look at the alternative ways of bringing in private investors to generate electricity from some of these gas assets without necessarily taking gas off the Alps. To be able to get a license after the eligible customer regime came into being almost 1.5 years ago, we've had obstructions. I mean, I'm talking about the state government. Here we've had an investor. We've signed a PPA with them a year ago to purchase 5 megawatts for our own use. And it's taken us almost 15 months to be able to get a NEC approval for that investment. Thank God the approval only came through last week. And so hopefully our investors are going to come back or go to site, and in another 6 or so months, we hope to be able to generate power for our use and for the industrial park which we have designed. So I can go on and on and on, but the key, one of the key challenges to economic growth, which I agree with you must be a key agenda for the next regime, is first, how do you ensure that you remove some of the constraints to competitiveness, particularly at the subnational level? Secondly, how do you think about diversifying your economy away from oil? How do you make much more smart investments in areas like agriculture? Because one of the proposals we are working on, being spearheaded by Edo State, is how to put about 1 million hectares of land under cultivation for oil palm over the next 5 years. This is an investment that has to be massively supported and funded. Another area we must think about is how to retool government itself. You raised a very interesting point towards the end of your presentation, where you talk about the cost of running government and the value you are getting from that spend. In Edo State, for instance, we spend approximately 30 billion naira a year paying for emoluments and salaries of staff. But do we get 10% value for that amount we spend? I doubt it. And so, so for us, the issue is because government is spending so much on governance, on paying people to work, on all sorts of things, it's to get government going. It should now focus on trying to put in place mechanisms to track the value you're getting from, from the spend. And unfortunately, as if in the era we are in the milieu we are in the political milieu we are in, it's not usually very popular. You can't be popular as a political leader if you begin to cut back on such wastes. But my argument is, listen, there are smarter ways to fund the system, to fund the political process. Because the bulk of what you think you're making as money is just being wasted. For instance, like you said, we spend quite a lot on media, right? And so how many pages of adverts do we buy every year as a state government? Okay, so why should I pay full price every time I go and place an advert? So I called my media team and said, you know what? Buy 200 pages per annum and see if we can get a discount of 60%, which they were able to get. Significant savings. But you think, oh, you're doing great stuff for government, but not realizing that, okay, the guys who used to place the adverts for government, at best will get a 20% discount, right? But they're all very, very upset that you're making that kind of savings because you're cutting off their own. Yeah. So these are the kind of things you have to balance, you know, in government. But it's necessary because you cannot afford to spend the kind of the amounts we are spending trying to run government. At the federal level, it's in the neighborhood of 78, 82%, sometimes in some years. You're spending 82% of your revenues to run government. Any company that spends beyond a certain amount, beyond 40% of its revenues as operating costs, will be in trouble. So except we, you know, look at government, we look at ways of cutting waste, ways of raising more. I'm not even sure that the first point should be to even raise revenues. The first point should be to cut back on wastes so that you can get a bit more to spend from what you currently have before you now begin to push on trying to get even more revenues. Because the level of waste today, I mean, call it corruption, call it what you want to, is just too high. But, you know, but it's possible because in Edo State, since I assumed office, we spent no more than 45% of our total revenues as operating costs. So let me not dominate the space. There's quite a bit to say. Let you know, other. Thank you very much.
Thank you, Excellency. Let me jump all the way across to Riyadh. Riyadh, is your mic working? Just test it.
Yes.
Okay. From your point of view as an international investor, as a domestic investor who has been in Nigeria for 20 years, how are you viewing the present, or even more than 20 years? Sorry, my apologies.
28.
28. So how do you see the present sort of dilemma we face in how to attract more growth, particularly more investors from companies that are already established in Nigeria and taking advantage of all the major plans that the government is unfolding? You have 3 to 5 minutes. Thank you.
First of all, thank you, Ike, for the report. That also I have attended all the report about the banking, except one as well, due to financial crisis. This report always, create an area for, advice for investors. When we look about the report and the multiple market cap over book value, all these issues, it's an appeal to investors to invest, for patient investors, not for long. Now coming to investing in Nigeria, first of all, the way His Excellency presented Edo State is always attractive. And really, and what is good about it, there are fundamentals, scientific presentation is not just appealing and Nigeria will be great or Nigeria will not be great. So I don't think we can solve all problems, and we shouldn't solve all problems, because if we solve all problems, everybody can do business in Nigeria. So we want to create a barrier for international people. If they want to come to Nigeria, they have to come through us. I spent 28 years in Nigeria, but I was born in Katsina, 11 Nagogo Road, opposite Barclays Bank, which is Union Bank today. So I promised to invest in Katsina, but I am keen to come to Edo State. As I always told the governor, we cannot solve all the problems. We cannot solve all of them. Security, it's okay. We all know security can be managed, can be improved. We have to improve a bit of everything. We don't have to be 10 over 10 in security, and the financial cost to do investment is 24%. And we cannot have 9% financial cost where security is not perfect. So we need a bit of everything. If we take the example of Edo State, it's very attractive in terms of environment for work, the location, the opening to the many areas, but we need a bit of improvement at all levels. Level of security. Although I was in Katsina, but 1978, I was schooling in Katsina because of the war in Lebanon. I'm Lebanese, so I used to study in Lebanon, but I had to study in Katsina, and the security level was excellent. Going to school in Katsina or to Jibia on the border with Niger, Maradi, and all this issue. So today what we need is a bit of security, a bit of patient money, a bit of patient money. We cannot go to invest in any state. I'm not only saying Edo State, but we cannot invest even in Lagos today with money from bank, 4 years tenor, 24%. And when you don't pay 1 week, you are on the non-performing loan. So, you know, so we need a bit of everything. And I'm quite sure, I'm very positive, because all the personal investment I did in Nigeria. I invest in logistics. I am investing in retail, the modern trade, which is not attractive to people. People believe that modern trade today is 12%, but I believe modern trade will go to 30% in 3, 4, 5 years. So we don't need miracles. We need just a bit of security, a bit of patient money, a bit of planning and focus. And maybe it's contrary to many people, I'm very optimistic, very extremely optimistic about Nigeria, extremely optimistic. We have seen signs of recovery. If we talk about, we are in the motorcycle business, we have seen some more demand. In the paper business, we recycle paper, we have seen the bottom. We see the demand is going high. It's surprisingly that the consumption is too low. But if we take the positive aspect of it, when the demand is too low, this means the growth is going to be high. So today, we consume only 250 grams of tissue paper per year, per capita. If we compare it to USA, it's 33 kilograms. So this means many people do not use tissue. If today we have 9% people using tissue, if they become 18%, this means we need double what we have today. So this is why I'm very optimistic. People, only when they saw that there is increase of salary, that we start negotiating with labor about increasing of salary, people start spending this money. We have seen the demand. We have seen the consumer is rich with money that he doesn't have already in his pocket. So the money is still under negotiation. This is why I believe the awareness in Nigeria is high. Everybody knows that Mercedes is there. Everybody knows tissue is important. We will make it. There are 3, 4 elements. I think I took more on macro level. He is more expert on that. But I believe we need a bit of security, a bit of focus, and a lot of patient money at reasonable industrial rate. And I promise that in 1 year we'll be in Edo State if we have all this. Thank you, sir.
Thank you, Riyad. Munachi, you are a long-term investor in the real estate sector. And, you know, in Nigeria, there are statistics that shows that there are 17 million homes that we need to build yet. But without the right sort of financing structure, how do we attract the funding to do that? Clearly, as Riyad had explained, we can't all be borrowing money at 24% to build assets that are there for the long term. In a home should last 20 to 30 years. What do you see, what do you think can be done to attract the necessary investment in the real estate sector?
Once again, thank you very much to Afrinvest for having us and persevering in the financial sectors and focusing on the banking sector in particular. Their work is very welcome. You're welcome, Your Excellencies and distinguished guests. Our company, MCO Real Estate, has been working specifically in the real estate sector for somewhere in the region of 10 years. We're among the first parties to put out professional reports, global reports that went out all over the world When, in the earlier days, when we were talking about Africa Rising back in 2013-14, we were getting calls from all over the world, Russia, China, global funds saying we manage $30 billion and Nigeria is the place to come to. Munachi, where should we put our money? So things were very good in those days. We were attracting a lot of interest and a lot of investment. And unfortunately, it's no longer the case. So we ask ourselves, where have things gone wrong? Where have things gone wrong with Nigeria that we are not attracting the kind of investments that we used to see? Currently, if you look at our GDP, real estate has suffered. I think real estate is actually still in a recession. Construction has suffered, although construction has come out of the recession. I'm talking about the recession for particular sectors, not just for the overall economy. So for us who are in the real estate and construction space, we do ask ourselves, why are we not building the way we should? Because for any economy, the construction sector, the real estate sector, the mortgage sector are supposed to be the foundations of that economy. They're supposed to be the store of wealth, starting from the lower class and rising to all other parts of the sectors, the office sectors, the shopping malls, and all these areas where we have put a lot of money into, but which are not doing very well now. In a nutshell, there are a lot of issues involved. Just to give in just a little indication, we used to invite all these investors in. Once the FX depreciation happened, wiped out a lot of them. They were not interested. We entered the recession, and then things grew worse. In our current presidency, when we started the anti-corruption drive, the local market of the big money spenders also went underground. So we lost the international investors and we lost the local money spenders. However, we were sustained by the demand from the bottom sector. If you look at, for example, the hospitality sector, but I think about 90% is the local market. There is still a lot of demand coming from below, but as you have said, when you have rates in the region of 24%, how can you borrow at those rates? Previously, we had done a lot of work with the NMRC and mortgages and trying to bring down these mortgage rates. Bringing them down was a subsidy, and of course, a subsidy in our market cannot work. So we have to look at things such as the high interest rates at which we are being offered mortgages. We have to look at driving the mortgage sector once again. Another area that is very important is in construction. When we keep passing a budget very late, we spend the money on the current expenditure, as we've talked about, and then the real sector, there's no time or there's no money left to go into the real sector, there's no money left to go into the construction sector. So from our perspective, if we start to look at a stable FX rate that will gradually draw back investors into international investors back into the market, if we start to look at the mortgage market once again, which we were looking at before, and then we got distracted, and start to look at these issues that can help support the lower end of the market, which again is a store of wealth. And if we start to look at passing budgets earlier so that all the money is not just spent on the recurring expenditure, but can go into the real sector as well, I think these are the things that we can look at for real estate and construction. Thank you very much.
Thank you. Let me jump to your left-hand side, Dr. Biako. You've been in the forefront of trying to build a specialist hospital. As a healthcare professional, you listened into my issues of concern in the healthcare sector. What has been your experience in that particular sector, both from a practitioner point of view as well as from an investor point of view?
Thank you very much, Chike. And Your Excellency, distinguished panelists, ladies and gentlemen. I want to thank not AfriHub. Sorry, my best friend is sitting here and he's the CEO of AfriHub. So I want to thank Afrinvest for this opportunity. My name is Dr. Obiako. I'm an obstetrician gynecologist. Actually, my subspecialty is laparoendoscopic gynecologic surgery. For 15 years now, we've been trying to build a specialist hospital to address the two top health needs of the country: infant mortality and maternal mortality, and non-communicable diseases like stroke, diabetes, and their complications. It's been 15 years of very interesting experience. And I think Mr. Chioke, in his presentation, nailed the problem of the country right on the head, but he was very diplomatic about it. And that is the inefficiency in the system. So I'll first of all briefly state the scope of the problem, the solutions, and the hopes. What is the scope of the problem? In the healthcare industry, out of 193 countries in the world, Nigerian healthcare system ranks 186th. So only we are ahead in healthcare system, we're ahead of just 7 countries in the whole world. Millennium Development Goals delineated the problems in healthcare for Nigeria. Number 1 is maternal mortality and infant mortality. The other issue, the main underlying problem in the healthcare industry is paucity of capacity. There is no capacity in the healthcare industry. And I'll give you a little statistics. Nigeria is now estimated to be almost 200 million population, 190 to be upright. World Health Organization states that for a country to be able to take care of its healthcare needs, it must have minimum 1 doctor per 1,000 population. Which means in Nigeria today, we need between 190 to 200,000 doctors. How many active doctors do we have? 36,000. Barely 23% of what's needed. If you go to Nigeria, compared to the world, we have 1 doctor on the average to 1,400, 1 doctor to 4,200 population. Of all the economies in the world, the top 20 economies, only South Africa comes in among the top 20 healthcare systems in the world. And what do they have? They have 1 doctor to 770 population citizens. Nigeria has 1 in 4,200. In some parts of Nigeria, like in the northern states, far northern states, Zamfara and all that, it's even 1 to 15,000 population. So the problem is there is no capacity. Nigeria has about, I think, 34 medical schools. And it goes back to a factor that Mr. Chioke brought up in his presentation about economic growth. The population is growing at 3.5%. Your economy is growing at 2%. There's a deficit, and that deficit means poverty. The same thing in the healthcare industry. The population is growing at 3.5%. Nigerian population doubles every 40 years. So in 40 years now, we'll be looking at Nigerian population being at about 400 million. And it's calculated that then Nigeria will be the 4th most populous country in the world. So if you're looking at that number, and you have 1 doctor to 4,200, and your population is growing at 3.5% per year, and you are producing Instead of 3,500 doctors per year, you're producing 2,000 doctors per year. That deficit is sickness and health, so that the population, by the projections, can only get sicker with no health. So what's the solution? It has to take a combination of government and private sector. The private sector is there, capable and willing. The public sector is where the problem is. And what's the problem in the public sector? It is venality. And when I say venality, I mean this predisposition to a certain attitude. Everybody feels they're in the government to get something for themselves. I'll give you one example. In our 14, 15-year experience in this project, we fought so hard to have Jonathan's administration, approve 4.5 billion naira for primary health care. What happened? 3.2 billion naira of it disappeared to inefficiency. You cannot complain to anybody. You cannot go to anywhere. Wherever you go, you're blocked. So that leads me to my conclusion. Nigeria has the capability to solve its problems if only we can get past a certain attitude. If only we can get into a certain value level where somebody who is sitting at their desk is not saying, what is in it for me? What can I get out of this? But has that, oh, if I do my work right, it will help millions of people. So to me, I think, based on our experience, and this might be a very narrow perspective, but my perception is my reality. If we don't address that big elephant in the room with either a national orientation of attitude and values, no matter what we do, that person who is sitting there and has a sense of entitlement, who is there for what is it for him, what is in it for him, it's not going to let it work. So, having said that, I will also say that there is hope. And what is that hope? A lot of people are beginning to buck against that attitude by trying to do something on their own. In Nigeria, we have this mentality, we have to have a Messiah come in and solve the whole problem. But for a Messiah to get up there to clean us, he has to swim through a very filthy water that when he gets up there, he's not clean himself. So, but there are people, and statistics world over show that it takes you and I doing our own things right, holding people above us accountable. You are in office and you see that your boss is siphoning money out, you speak up. Not, oh, can you give me my own cut of it? And when you start having that, you have those green shoots. After a while, you reach a critical level, a critical mass, where things just move on and move towards that system. So my perspective, 15-year perspective in this project, is such that I have seen it all. But I have also seen people like, and organizations, for instance, sitting right here is the country manager for Propaco, the French Development Fund, who has been working with us for 4 years, knowing fully well all the issues in the system. And sometimes I think it's ironical. I have to go to a French man to help me do things right in Nigeria.
Thank you, Dr. Obiako.
So thank you very much.
Nice segue.
Thank you.
To bring Olivier Fola to speak. Olivier, from your point of view, working with Propaco and being one of the leading development finance agencies in Nigeria, you've seen lots of challenges of how we attract foreign direct investment. Perhaps you can share with us just a synopsis of some of the issues that you have to encounter in order to convince Nigeria to create itself, make itself more receptive to attracting this so badly needed FDI? Thank you.
Thank you, Ike. I would like, in the name of Propaco, to Mr. Governor and ladies and gentlemen, thank you for the presentation also of Afrinvest. I must say I share whatever you've said, and I would like to come back to your points. From an external point of view, because I'm not Nigerian, although I've spent 6 years now in Nigeria, it's always a challenge to see how many opportunities exist in Nigeria and how few realizations happen practically. From an investor point of view, we need confidence, we need stability. It's obvious, you said it. Now, there are a few things which could be done, and frankly speaking, probably will bring a lot. As DFI, I'm supposed to provide long-term funding to Nigeria. However, I have no access to Naira funding. I have to go through the local system. And because of that, what I've noticed is all of them have mentioned the high rate that companies get in Naira, which means that it's not bearable. And if I land in FX, while the company is not exporting, and it's normal, because you have got a local market which is huge, you need to supply it first. How should you borrow in dollars or euros while you get Naira and you never know after 1 year what could be the rate? We have seen it in the last 4 years, something like 75, 80% devaluation. No project can bear that at this stage. Now, we are facing some other challenges. As DFI, I have some limit on the country. Why? Nigeria has got 200 million people today. They announced third country in the world in 2050, something between 450 and 500 million. I should invest massively in Nigeria. And I cannot do it because as financial institution, I've got an international rating. My international rating says, look, Nigeria is rated B. It means practically that you are just above the junk bonds in terms of investor. And because of that, I have some direct implication on my cost of capital and my capacity of using my equity to fund Nigeria, which means today when I lend 100 to Nigeria, it costs me 220, 250 according to some sectors of activities. That reduces my capacity of funding Nigeria. And everything is linked with confidence. I must say, since I've been here, I've never understood why Nigeria, the bankers themselves, are not, I would say, advertising Nigeria in the good way. It means that generally abroad sees Nigeria as a dangerous country in general. I get back to what you said in the sector, Mr. Boulos, about like it's not too bad for local investors because at least we have some barriers from externals. But at the same time, it costs a lot. Bankers should realize that because of this rating, which is valid or not, depends which way we are seeing it. But obviously it comes to the fact that we don't know Nigeria from outside. We only see Boko Haram, kidnappings, which are true. But don't you think it's not more dangerous to live in Los Angeles than in Lagos? I'm not sure. Maybe we don't know the rate of murder which exists in Lagos. But we know a bit more in Los Angeles. However, I'm quite sure that with firearms, they are it's much more dangerous to live in Los Angeles than in Lagos. But we don't know it from outside point of view, and that is very costly for you, Nigerians. I told you that impacts on my equity, that impacts, of course, on my cost of funds. Today, if I lend to Nigeria, to respect the conditions which are imposed to me from the rating agency themselves, I have to lend between 600 and 800 bips above my cost of funds. And you imagine the multiple effect which has got on the project. These are things which you have to take into account, and personally, I have said it since I'm lending, I've lent about $700 million in the last 8 years to Nigeria. I could lend much more, but I'm limited because of my country limit. And I have said to the bankers, please do advertise. I mean, we have to understand more about Nigeria. We have to understand more about its capacity. That's one thing. Another issue which is not probably true today, but you have mentioned it and is going to become a very big issue tomorrow, is about education. As investor, I'm not looking at it immediately, but I'm looking at it as what do I get for technicians? What level of technicians do I get? Of engineers do I get? And what's the general environment at one stage or another? And I realize that today, the issue you raised, Ike, is so true that it's very dangerous for Nigeria for tomorrow. In Nigeria, you have maybe 250 languages. 3 main ones, Hausa, Igbo, Yoruba. But the common language you have chosen is English. English is taught at school. If you don't go at school, yes, you may learn pidgins, but I'm not sure that pidgins from north is the same as pidgins from the south. Can they understand each other? What happens tomorrow for the country is that as Nigeria, you need to have a common approach. And if you don't master this, that's going to be a big issue. Now, to be frank, and when you have mentioned that you should have at least 20% of GDP or budget, sorry, focused on education, I'm not sure that these figures are matching with what you can get. So the traditional way of teaching is probably outdated. It doesn't mean that you cannot improve. Look at what happened on the phone. From the fixed, you have just jumped out of that and come to the GSM. And probably today, in certain part of your economy, you are much more advanced than in Europe. Money banking, for instance. Why? Because banks in Europe, at least in France, are simple. We go to the next branch, and open an account, and have it done. We do our transactions. Today, it's changing. But in Nigeria, you do it by, through your phone. So we can imagine that tomorrow, on education side, you also jump. Today, when I'm receiving projects to fund, I would say, buildings, I'm not at all against your operation, but I'll come back to that. I'm wondering if it's no more useful to fund contents than buildings. Because what is important for Nigerians, not the buildings. You will never get to the level you need. Imagine today you have 1.1 million students which could go to university, which have no space every year. How can you match that? It's too late. But you can match it through another approach, which will put you in the 21st century easily. And what is interesting is you have that capacity, because when you see the e-banking, the e-business, Jumia started here and so on, it goes so fast. You have that engineering capacity to do it. It's true that when you look or attack MTN, probably on very good grounds, but at the same time, MTN is the one who brings Nigeria towards the 21st century, but because of their investments in the capacity of technology and so on. So we have to balance all of this. Now, obviously, investors would be much more confident if we could balance all these things and understand Nigeria a bit more. For DFI, we have to solve one thing which we have not done yet, is how we can approach and fund Nigeria in FX, hard currency, but that the local companies have access in local currency at acceptable rates. This is a major thing to find. Now, I would like to see also something else. On the private sector, it seems to me that very often project managers, or in fact promoters, bring you a lot of good ideas, a lot of good projects on the paper, but they don't put their hard money as well. I mean, you know, very often I see projects where people put $100,000 on the table. They have projects of $40 million. The project itself is not stupid. On the contrary, it could work. But for an investment point of view, I cannot land that, even if I believe into it, because we have to have a balance. We have to have local investors taking their risk alongside foreign investors. Otherwise, we cannot believe into it. We are too afraid. And if you surround all these with what we hear about Nigeria, then people say, look, should we come? I can tell you that today, because of your size of population, because of the situation you occupy on the west coast of Africa, because we know that today this is the first country in Africa in terms of GDP, foreign companies are coming all the time. They are coming to us to say, okay, what do you think, what could we do, and so on. What we realize is they don't know the country. We have to explain them. But at the same time, when we tell them, look, you have to put $500,000 on the table first to understand Nigeria, they are just a bit afraid. Say, shall we recover it? And this is where we have to explain. And because your communication as well has to improve, then we can move further. So for me, I'm very optimistic for Nigeria, as long as you have to be realistic. I mean, you can ask from foreigners to put their money on the table, to bring in some technical capacities alongside with you, but you have also to show that you are ready to take some risks. And the difference between Nigeria and surrounding countries, you have a lot of money available. You have also to trust your own country.
Thank you. I think that's it from our panel. I think it will not be fair if I didn't give some space for a couple of questions from the floor, from our distinguished audience. So I'll hand over to the MC, Wale.
Okay.
You can take 2 or 3 questions.
I think we can probably take two, so we don't overrun too much. So please introduce yourself and direct your question. Okay, so let me just bring it to you.
Good afternoon, everyone. Thank you, sir, Mr. Ike Chioke and your team for the great work you do. My question is directed towards the Executive Governor of the state, Mr. Godwin Obaseki. My name is Kelvin Emmanuel, and I'm a derivatives trader. As a member of the National Economic Council, I am very curious as to how Nigeria has an ECA, excess crude accounts, that is not in the Consolidated Revenue Fund, and it's not appropriated by the National Assembly. And I remember when the government set the benchmark for oil price, it was $45 for the budget currently running, and the market has gone to over $80, and there's a huge difference between the budget benchmark and the current market price, which goes to the ECA. I am very curious as to why the government is not deciding to collapse the ECA into the National Sovereign Investment Authority to build buffers, because I learned that the NSIA has Future Generation, Stability, and Infrastructure Fund. So you have a huge differential that's at the whims and the caprice of the National Economic Council. Why is it so? I think you're in the best position to answer this, sir. Secondly, I'm sorry, sir. Secondly, very brief question.
You need to be very brief.
Yes.
Thank you.
I am quite curious to know, Mr. Ike Chioke, this question is directed at you, sir. I'm quite curious to know as to how the NAFEX market, the Nigerian Autonomous Foreign Exchange Fixing, and the IA window that was set up by the CBN, the FMDQ, how they are helping to hedge the risk of currency fluctuations for foreign investors who come into Nigeria? Like the panelists who just spoke about currency risk, people bring in money and they're not exactly sure of what happens when they want to take it out. How is the CBN using the NAFEX to help investors hedge the risk of currency fluctuations? Thank you very much.
Okay. Do we take another one? Okay. So please, I need the next speaker to be much more concise. Let me go to this part of the room just for democracy. We're in election season, so okay. I want to go towards the back.
Thank you very much. My question goes to His Excellency, the Governor.
I need you to be very concise.
We don't get to see them regularly, so when we see them, we ask them some questions. He mentioned about NEC, and the eligibility customers' concerns and effort, that he's making to get some independent level of power for the state, to attract investors. But there are some concerns and delays from the part of NEC. I would like you to speak true to that, because I know that Lagos is also planning something on embedded generation, as the case may be. And if you are thinking in that direction with investors waiting for you, I don't think that delay should come from NEC, to be able to effect that kind of a push that we needed to get the economy on track. Then secondly,
no, please. We really have to move on. My apologies, please. Ike? Any more? Oh, you want us to take more?
Yeah, there's one person raising their hand there.
Okay.
Thank you, Your Excellencies. I quite agree with the doctor in the house. He talked about the attitude in resolving most of our challenges. But I want to add to that aspect, that attitude without knowledge. I'm quite impressed when I heard that the governor of Edo State is the actual founder of Afrinvest. So my question is this: if we can have knowledgeable people in the political space, why can't we now expunge inefficiencies from our constitution? Because for me, it is retrogressive. If a constitution asks me that I need a minister in all the 36 states, so that will be taking the current expenditure above the roof. So if we have these knowledgeable people in power, why can't they address the fundamental issues that, hampering the development and curtailing inefficiencies in our constitution?
Right.
Expunge things like federal character or quota system that does not add up or make sense. So, Your Excellency, sir, is there any way you can advocate for the expunging of those inefficiencies in our constitution? Thank you.
Right, thank you. I think the point is taken. Can I still go?
Okay, just one last question.
Okay, this will be the last, right? Okay.
There's no lady that asked the question.
Okay, my name is Ugochukwu Ebu. I'll be direct. Is it really possible for Nigeria to actualize all these goals? Like you mentioned, we still have our recurrent expenditure at about 70%. If it's not possible, Your Excellency, how long do you think it will take us to drive the ratio of recurrent to capital expenditure down? Because I've been a believer for a very long time that until we get it down to below what the capital ratio is, we would never progress as a nation. So from your experience as an executive governor, how long do you think Nigeria needs to reduce its recurrent expenditure down to about 40%, and then the capital to about 60%? Thank you.
Thank you. All right, so we'll send it over to the panel now, starting with His Excellency.
Thank you. I thought I was coming to launch a banking report. I didn't realize I was going to be under inquiry. Let me start with the last question. How long will it take for us to begin to have that level of fiscal balance? I believe we have started the process because the from the pronouncements of the National Economic Management Team, this is an issue that has been raised, that I know is constantly discussed. And you have to understand that there are many elements, there are many things that come together. If you look like some of the issues raised by Mr. Chioke, there's some national imperatives we have. We have the issues of the challenges of security, the youth bulge, the lack of investments in prior years in critical infrastructure. Without growing the economy, without opportunities for jobs, can you begin to retrench and lay off people down? So there are some imperatives that will take a while to grow out of. I guess you can look at the glass and say, is it half empty or half full? The issue is, yes, at our current earnings today, we're spending so much for recurrence. We can either reduce the earnings or we either reduce the expenditure or increase the earnings. So I guess that is why we're in a democracy. That's why these issues are coming up for debate. And depending on who has it on his agenda or how it's argued, we hope this will constitute one of the agendas for the next administration. That dovetails into the question before, which talked about
constitutional reform.
Constitutional reforms. That's why we have elections. That's why we have these debates. Which way in Nigeria? What should we be doing? What should be our priorities? Those are the issues we expect that will be debated in the next several months during the electioneering by the parties. So, constitutionally, yes, my party, the APC, has a position paper on constitutional amendments. We need to be able to convince Nigerians that, yes, these are things, these are points that need to be addressed. And if that is what we believe the populists want, then the next administration definitely will put some of those issues in the front burner. Clearly, that is within the political realm, and it's been addressed. The question on knowledgeable people.
NERC, yes.
On NERC. Yes. It's a bit complex because, first it took the better part of a year to even get a new chairman for NERC. We was caught up in the Senate confirmation process, so they couldn't make decisions. Secondly, we have a distribution company that is situated in the States that claims that it owns the territory, and therefore nobody else can come into the territory to do anything in the area of electricity without their concurrence. And we had these issues and debates with NEC. So we had a very stiff opposition from the local distribution company who petitioned, opposed, wanted to go to court, stopping someone else from coming to invest and distribute power. I mean, it's a very crazy situation. You claim that you have the franchise for a territory, you cannot provide electricity, you will not allow someone else who can to come in there to provide. So these are some of the issues that still need to be looked at to smooth it out. So the case of NERC, yes, they had some internal challenges in terms of not being able to get a chairman, but more importantly, we had to deal with a petition and the resistance from Benin Electricity Distribution Company. They threw all sorts of obstacles in the last 2 years on our way to ensure that we cannot bring anybody else to compete and provide here. And this, most discos or most people will have the same problem. Fortunately, I think we were able to get to an agreement last week, and the first license, by the grace of God, will be issued to the investor under the new eligible customer window in the next couple of weeks. On the issue of
ECA,
yes. You have to understand that the money in the ECA belongs to the 3 tiers of government: federal, state, and local governments. So so whenever savings occur there, you have to go to the owners to get approvals to spend. The last time we took money out was for security concerns, about $1 billion, and you recall, all the noise that was made about it, and some states even went to court to try and challenge that move. But the good thing is that, at least since, even before I became a member of NEC, we have twice been able to move savings, some extra monies from the ECA account into the Sovereign Wealth Fund. So it's just not that straightforward that, we can, on our own at NEC, just write off or decide to move balances from that account for any national purposes. But where we have found the opportunity to, I think the last tranche was about $250 million, which was moved from the ECA to the Sovereign Wealth Fund account. I am an advocate for savings, and that, as and when we have the balances over and beyond the threshold, because I think there's a quiet agreement and arrangement that at any point in time, the balance on the ECA account should not be less than $2 billion. And every time we found, that we're in excess of it, I think usually when discussions arise as to other alternative uses to put that fund to, we normally, try and build a consensus, because it's just not our fund. The federal government alone can't, the states alone can't. We have got to also talk to the local governments to allow us save some of those funds or use some of those funds for priority projects. So I hope I've answered the 4 questions, but quickly, let me just, in my final notes, talk about 2 key issues I think are critical. First, issue of human capacity. The quality of human capacity to produce, whether it be in healthcare, in manufacturing. Yes, we have a lot of people, we have, graduates, but are they employable? That is one key issue that is hampering competitiveness, which we as a government, as a nation, need to deal with. In Edo State, we are emphasizing vocational and technical training. We're putting a lot more money in revamping our technical schools, in ensuring that we get our vocational centers to work and begin to train artisans and skilled labor. The other thing we're looking at is investing in education, particularly the basic education. We in Edo, we have about 500,000 children between the ages of 6 and 12. And so what we have done is we're undertaking a national experiment. We are retraining all our teachers using digital technology. And we have what we call the Edo Basic Education Sector Transformation, where we have partnered with a technology company, and for $40 a child per annum, we're getting all those 500,000 children to now begin learning using modern tools. And after 1 term, we're beginning to see significant transformation. A parent came, we did a pilot for the last term, 2,000 teachers, 300 schools, and this term we went on a full rollout. We've trained 5,000 additional teachers, now 7,000, and we're implementing in 612 schools. And a parent came up to me and said, Mr. Governor, I think something is going on. I want to thank you, but I have a problem. And I said, what is it? He said, you see, you see that my son in primary 1, after 1 term, has become so enthused about school. The child is now able to read and do his sums. He comes home excited, reading the books they've given them, counts 1 to 100, 100 back to 1. And I said, that's very good, madam. He said, but the problem is the brother who is in primary 4 cannot read.
Thank you. Thank you, Your Excellency. Then I guess you have to find a way to fast-track that your intervention program. I see a hand being raised by Dr. Obiako. If I may just give you 2 minutes.
I want to answer the question that a gentleman over here asked, which is how long does it take, essentially, to get to where you want? I have researched that a lot, and based on both anthropological factors of human race and developing countries. The time from when a society gets to the point where they want is dependent, it's a binary factors. One, the education of the citizenry. How long does it take the citizenry to get educated where they start holding their public officials accountable? And two, the other one is an anthropological factor that is known as the nth factor, nth monkey. And that is based on a story I will tell shortly. But to get to that level of uneducated citizenry, the time span for it is no less than 25 years. It can be as high as 50 years. Where a country is in that trend, people can't always tell. For instance, in Nigeria, you can tell that we are moving forward. There are certain things that you used to do before 5, 10 years ago that you cannot do today. For instance, vote rigging is getting very difficult because the citizenry is getting educated. That process is an evolutionary process that leads to the nth monkey. And let me explain what's the nth monkey. In an island, in an isolated island in Indonesia, monkeys ate roots, still eat roots. You know, they dig for a root and then they eat it. One time, one monkey dug it up. It fell from his hand and he rolled into the seawater, which is salty. He realized, oh, if I put my root in the salt water, it tastes better. He started doing it. Other monkeys emulated it. Eventually, you reach that critical mass that I referred to, where it looks like all the consciousness of the monkeys in all the different islands just got lit up. They realized that, oh, this root tastes better when I dip it in seed water. So all of them started doing it. So what's my point? My point is that the evolution, to answer your question, it takes 25 to 50 years. At some point, you reach that critical mass where everybody knows that it is wrong to let people get away with murder. It is the right thing to do to hold people accountable. When that will happen is based on this phenomenon of the ninth monkey. For instance, and I'll stop. A local government official, the chairman once told me, I need to employ 400 people. But I am employing 1,400 because I have to give people some work to do. He doesn't understand what it is, what a burden it is on the public system to have 1,000 people employed when they are not needed. But the question is, those 1,000 people, if they knew better and knew that their government money, their money is being wasted, will they accept that situation? So that is where the educated citizenry comes in place. And how long does it take? Between 25 and 50 years. But at some point in that transition, the nth monkey factor comes in place. I hope it answers your question.
Thank you, Dr. Obiako.
I need half a minute.
Yeah?
Half a minute.
Okay, half a minute. Okay, Mr. Riyad, go on.
I'm not trying to answer for Parco, but there is very important subject here that even if I want to go to Ghana today, I have to go and buy or merge with a company that is 1% of our company because of the local knowledge. I don't want to go into learning curve. So always, I'm not trying to promote Afrinvest. It will show conflict of interest. But always you have people, local people, that they have the experience and the knowledge to highlight on the real sector. And the real sector. So we cannot put everybody in Nigeria in the basket of Boko Haram or Delta or Lebanese or Indian. We have companies that have track record to do due diligence for DFIs where we tick the box and we can hedge naturally the foreign currency by exporting. So today, if I have a reliable company like Afrinvest or any company in Nigeria, they can easily give in 24 hours that this company is solid, is long-term, and it's hedged by gravity for any foreign exchange risk, because today there is no instrument in Nigeria to hedge. You have to swap and pay the difference of interest, which is not our case. So today, when I prove that I have 3 times and I can go to 5 times of my debt by export, so I cannot be put in the same basket of X, Y, Z. So we have to determine the real sector. And this is why Central Bank is trying to work on what we call the real sector support fund to determine the company, not the big company. I'm not advocating for big company. Also, small companies should survive. I'm saying the real sector support fund, where the fund will go to employing people, creating technical school. I really appreciate the governor about the technical school. We are trying one in Lagos. We have difficulties, but when we have patient money, we can spare more money to this technical school. I know a big company in Nigeria, without naming for marketing, that they have only 2 expatriates, because they have created a school, technical school of electrician, of mechanical, since 30 years. So we have to start somewhere. Thank you very much.
Thank you very much, Riyad, for responding to that closing question on swaps and futures. For that one of the questions that came up. The only available structures you can use now within AFEX window is really all short-term, within 12 months. Anything beyond that, you have to think of how you earn your own foreign exchange. We are not even able to buy oil futures, even though we're an oil-producing country. So on that note, I'd like to thank my panelists, Mr. Riyad Baloji of the Bodus Group, Dr. Ifeanyi Obiako, Mr. Okoye, Mr. Folan, and His Excellency Governor Basaki. Thank you very much indeed for being here. I don't want you to leave the stage yet. We've now come to the highlight of the event, where we're launching a banking report. Could we have some people help us bring the table here?
Just before that, if you don't mind, Your Excellency and other panelists, we'd like to take a group photograph of the panelists. So please, if you can just step forward slightly, and then we can move on to the launch. Chairman, please join them. Thank you very much. Another round of applause for the panelists, please. Thank you. So can we have some assistance with the reports? Moving on to the launch now. Okay, directors of Afrinvest should please join us on the stage now for the launch.
Set? So, ladies and gentlemen, thank you for your patience. and for being here to support us this year as we launch our 2018 edition of the Nigerian Banking Sector Report titled An Economic Agenda for a New Government. So can I ask all the members of the table here to help me lift the veil at the count of 3, 2, 1. Thank you very much. We'll have a small reception outside for everyone, and then we can meet and talk and exchange pleasantries. Thank you very much indeed.
So, just before you leave, just one more announcement. Can we have Victor, the DMD at Afrinvest, for a quick vote of thanks? We also like to recognize the presence of the CEO of Sterling Bank, who just joined us, Abubakar Suleiman. Thank you so much for coming.
Yeah, okay. So on behalf of the board, management and staff of Afrinvest, we'd like to appreciate everybody who made it a duty of care to show up. Thank you for listening, giving us the hours and the time. Thank you for joining us in engaging in this conversation. We hope that as we continue to push the narrative and to engage further, we'll push this country forward. Thank you for your time. For everyone who's here, I believe there'll be complimentary copies, hard copy for each person. So there's a complimentary copy of the executive summary for everyone. But more importantly, for everyone who wants a copy, there is an arrangement in place. As you would come to understand,